Hi folks, Chuck Gibson from Financial Perspectives here. It's been a few weeks, so I thought I'd put together a quick video letting those that are interested know what's happening in the markets. March 1st doji, followed by a bearish engulfing candle, marked the top of this strong reversion to the mean rally off of Christmas Eve's bottom. This two-day pattern just confirmed what should have been obvious for those who were watching closely. It marked the end of this rally. Why so obvious? Because it occurred right at the same zone of resistance that rejected other short-term rallies 3 times before. Who still thinks the markets don't repeat? Combined with negative RSI momentum divergence, the market telegraphed a high probability signal of what was ahead. The market loves symmetry, and that means big moves in one direction, like last fall's impressive collapse, are matched with equally large moves in the other direction, this year's epic rebound. If these oversized gyrations continue, we need to be open to the idea we could be looking at a lot more downside over the next few weeks to months. If so, being mentally and emotionally prepared and knowing where an eventual buying opportunity is likely to occur is all that an investor can ask for. From a longer term perspective, we're in the small short-term trading range that is contained within the much bigger range formed by last September's high and December's low. As I stated in my last video, every consolidation can always turn out to be the end of the current trend, which is why once entered, it becomes more important to keep our eye on the ball, especially as it approaches either boundary of the range. Last Friday was another tough session for the S&P 500 as it lost ground for the 5th day in a row in 8 of the last 9. While the initial down days were trivial and more sideways than down, the last few have started to add up, and we now find ourselves at the lowest level in almost a month. Now that we've given back a big chunk of February's gains, the question is, what comes next? Even though this has become the biggest dip of the year, it still has a long ways to go before it qualifies as a significant pullback, and much, much further if it wants to match the intensity of last year's strong start. As you know by now, the goal is to predict the future down to the day and dollar, but to understand the odds and probabilities and be prepared for what's coming our way. It's a lot easier to sit through a dip and react rationally when we know what's likely coming. It also allows us to actively look for the next opportunity with a clear head and not overreact and make a poor decision due to the emotional swings induced by a market decline. For both long-term investors and short-term traders, the bottom line is exactly the same right now. It's time to be patient and wait for the market to show its hand. In both cases, we're in the middle of a consolidation and price is below its 5-period moving average with no clear short-term sign of a reversal signal. We know by now consolidations are best dealt with patience and waiting for the time a clear and decisive move out of the range has occurred before adding additional risk capital to the markets. Until then, there's no need to overcomplicate this, so it's a great place to end the video. I very much appreciate you taking time out of your schedule to listen, and I hope you have a great week.